Okay, let's get right to it. Samsung just dropped a massive earnings print, and it's validating the entire AI supply chain. But here's the catch. It's colliding head-on with a geopolitical oil spike, and that's creating a serious discount rate anchor for US growth assets. And this is the shock number that's setting the tone. We're talking 57.2 trillion won. That's Samsung's preliminary operating profit for Q1. This isn't just a number. It's the catalyst. It's the hard floor being put under the entire semiconductor sector right now. So let's dive into the thesis here, because this is way bigger than just one company's report. You need to see this as a structural signal, one that's validating the entire AI hardware sector, all the way from Seoul to Santa Clara. Now, the real signal is the confirmation of demand. The strength we're seeing in HBM3E tech from strategic partners like Samsung and SK Hynix, well, that transmits directly to key US supply chain nodes like Micron, and that in turn provides some powerful support for NVIDIA. This is realized earnings, not just some rosy forward guidance. But you gotta look deeper. If you just glanced at the index, you'd think everything was strong. But underneath the surface, a totally different story. The gains revealed a really critical fragility. And that right there is the insight the mass media is going to miss every single time. And this lays out the fracture perfectly. Look at that. The KOSP strength was completely isolated to semiconductors. At the same time, domestic capital was just liquidating other key growth sectors like bio and platforms. This divergence, it's the blueprint for the US Open. Mark my words. All right. Now for the antithesis. There's a powerful counterforce that's weighing on all growth assets tonight. Think of it like an anchor, pulling down against that AI earnings updraft we were just talking about. And this number is key. This isn't just some random commodity move. The spike we're seeing in WTI crude to $115 is a direct repricing of geopolitical risk. It all stems from a critical policy deadline. So this number, it's the key variable for the discount rate. And here's the mechanism you absolutely have to understand. A policy event is feeding directly into inflation fears. What happens next? That pushes up the discount rate, which then puts pressure on the valuations of all long-duration growth assets. So you've got the supply chain saying bull and the bond market screaming bear. So the crucial level to watch right now is this one. The 10-year yield is pushing right up against the 4.35% ceiling. This is the zone. This is where rallies have consistently stalled out and failed before. So what does this all mean? It means we've got two powerful opposing forces that are on a collision course as the US market gets ready to open. We have a fundamental earnings anchor and a macro discount rate anchor. And this image, it just captures the core conflict perfectly. On one side, you've got the structural support from realized hard AI earnings, and on the other, you have immense macro pressure coming from these policy-driven rising yields. Look, the question for tonight isn't about trying to predict a winner. Forget that. It's about knowing which one of these two forces is gaining control of the price action in real time. That's what matters. All right, time to move to the battle plan. Let's build this into an actionable strategy. From this point on, we are switching to command mode. Focus on the levels. Watch these two data points. They are high impact and will test this fragile balance. Be aware. Strong, durable goods could ironically reinforce that higher for longer yield story. That would strengthen the discount rate anchor. Do not trade the headline. Trade the supply chain. This is your tactical map. These are your non-negotiable price levels. See them as tripwires. They will signal which anchor is dominating the action. Memorize these levels. Execute this volatility check. If WTI sustains above 115, the discount rate anchor has full control. Your primary objective shifts. You are now in capital preservation mode. Immediately, no hesitation. The supply chain signal is validated. The yield spike is immediate. This conflict decides the open. How you position against these levels will determine your outcome. Log the result at 0630 EST. No exceptions. Be here for the Asia close. Before New York opens,